1 second, let me check. Yeah. See, we discussed GDP, then we discussed the trends in GDP and Atmanirbhar, of course, the PLI, what are the measures taken to push back GDP to normal growth. And another basic aspect which is important, there are two more concepts which we need to see before we go to agriculture, industry and services, sectorial growth. One is the whole concept of inflation and how RBI is trying to control inflation. We have something called Monetary Policy Committee. A surely expected question in the mains is Monetary Policy Committee. And in the preliminary also, what is this MPC, when this was set up, what are the instruments of monetary policy control is one important segment. The another current topic is the broad economy related is the question of India becoming $5 trillion economy. So what we do is, today we will discuss this inflation, stagflation, deflation, and what is Monetary Policy Committee and what are the instruments of Monetary Policy Committee. So most probably, I think in the next class, which will be on Monday, some 15-20 minutes we will devote to the $5 trillion economy. What are the advantages or what are the trends? Do you think India will become a $5 trillion economy, like that, some discussion. Then of course we will go to the traditional way of agriculture, then industry, services as per the syllabus, and syllabus also says the same thing, in fact, what I said. Now there are three concepts which I want you to understand before we go to the monetary policy or whatever. Actually today all came late, so I was thinking whether we will start online and start recording. I was just getting up and these people came. Okay. Now we have three important concepts which you should understand. One is inflation. The second one is stagflation. The third one is deflation. Okay? Right? For a basic economy point of view, in the previous class, in the early discussions, we are talking about how GDP and different sectors and fiscal deficit, remember? So if you want to see whether an economy is doing healthy or not, one parameter of course is GDP, then fiscal deficit. The third important parameter is inflation, right? Now if somebody wants to invest in India or foreign direct investment, or even Indian investors, if you want to invest in some company, or even our day-to-day life, everything is depends on. So to rate an economy, how it is functioning, the three parameters, the three basic parameters are GDP, of course, then fiscal deficit, then inflation. Any investment banker or any foreign direct investor or foreign investors, when they are looking at an economy, the three parameters they see is GDP, fiscal deficit and inflation. If somebody wants to invest in India, or India wants to, you want to invest outside India as an investor, these are the three parameters. So inflation becomes a very, very important aspect. Now basically, when you say inflation, in normal terms, it is actually price rise. In simple terms, it is price rise, right? Then we can also say there is an increase in the supply of money. Inflation also means increase in the supply of money. Okay? Now there is one more point here, supply of money. Now when money supply increases, there will be a reduction in the value of money. Let me give you an example. We are getting one apple for say ₹5, right? We are getting one apple for ₹5. Now this one apple, the price has gone up to ₹10, right? Same one apple. Now what does it mean? 50% reduction in money value. Yes or no? Very simple. Earlier we are getting 1 for 5 rupees. Now we have to pay 10 rupees, which means 50% reduction in the value of money. So inflation would also mean decrease in the value of money. Decrease in the value of money. So these are the three important aspects of inflation which you have to remember. Any one is inflation. If you are saying the money value is decreasing in an economy, how do you characterize that trend? That is inflation. If increase in the supply of money, that is inflation. Price rise, sorry, here you have to write price rise, increase in the prices. Once I was listening to former RBI governor Y.V. Reddy. In fact, he is the chairman of the 14th Finance Commission. After 14th Finance Commission report came up about 7-8 years back, they organized the School of Economics, University of Hyderabad, and Samatha organized a series of lectures, discussions on 14th Finance Commission. In fact, Y.V. Reddy is the chairman. He was also there, and I am one of the panelists in that, where to discuss it. It was also on my Facebook account. I kept the link there long back. Okay, and very interestingly, the scholarship of Dr. Y.V. Reddy is so interesting. He was a professor in Osmania University. He did MA Economics, then joined as a lecturer, then got into civil services and became so great RBI governor, saving India from recession. He is of course a Telugu man, right? Telugu man and basically very Telangana person. Chala simple ga అర్థమయ్యేటట్టు తెలుగులో చెప్తారు ఆయన ఎకనామిక్స్. ఇదే మీటింగ్లో దే ఆర్ స్టూడెంట్స్ ఆల్సో, ఇట్స్ ఎ బిగ్ డిస్కషన్. దేర్ ఆర్ 8 ప్యానల్ డిస్కషన్స్ అక్రాస్ ద కంట్రీ వేర్ ఆయన, నేను, ఇంకొక 2-3 సీనియర్ ఎకానమిస్ట్ అంతా టూర్లు తిరిగి మాట్లాడాం. ఆయన ఒక విషయం చెప్పారు ఇన్ఫ్లేషన్ గురించి మాట్లాడుతూ, ద సేమ్ పాయింట్, మంది ఎక్కువైతే మజ్జిగ పల్సన్ అవుతుంది. Right? See how simply explained. The more you have Majjiga and villages lo akkada, they have buttermilk and all that, na. So if you want to have more people, if you have more people, suddenly what they will do? Andro ko neelu posestaru ante urgent ga. We used to have one milk supplier when I was a student, when I was at my home. See, in those days the milk is supplied in cans, not packets were not always possible. He used to get a steel, aluminum can and give the milk. He is really a great businessman. The milk quantity remains same. మనం 1 లీటర్ ఎక్స్ట్రా అడిగామనుకోండి, మన్నే మంచినీళ్ళు అడిగి అందులో పోసేసి 1 లీటర్ ఇచ్చేవాడు. వాట్ ఏ గ్రేట్ బిజినెస్ మ్యాన్. అండ్ నోబడీ యూస్ టు కంప్లైన్. ద జోక్ ఈజ్ నోబడీ యూస్ టు కంప్లైన్. ఇప్పుడు 1 లీటర్ మిల్క్ తెస్తాను నేను, మీరు 2 లీటర్స్ అడుగుతారు. నేనేం చేస్తాను, ఒక వాటర్ బాటిల్ ఇస్తారా 1 లీటర్ అని అడుగుతా, మీ ఎదురుగుండానే అందులో పోసేసి 2 లీటర్స్ మిల్క్ ఇస్తా. వాట్ ఈస్ దిస్? డైల్యూషన్. సో ఇన్ అదర్ వర్డ్స్, the simple meaning of inflation is decrease in the value of money. There is more money, the value is come down, right? So in Keynesian economics, James Keynes is a well-known monetary economist. He was the person who was the economist who actually spoke about all this money supply and inflation and all this. There is a technical term which says M1 plus M2. Okay? Inflation would also mean M1 plus M2, which is total money, that is M3. So inflation can also be calculated as M1 money 1 plus money 2. Okay? So this is a very simple meaning of inflation which you have to remember, right? Now we will go to the reasons for inflation after a while. Now what do you mean by stagflation? This is also another term in preliminary examination. In the last 2 papers that you have written, some of you have written, these concepts have also been asked. If there is a stagflation, what do you mean by stagflation? If there is slow economic growth, okay, slow economic growth or GDP growth, slow GDP growth, then plus high unemployment, plus inflation. These three situations, if they are simultaneously present, that is called stagflation. Slow economic growth or GDP growth, high unemployment and plus inflation. A simultaneous growth of this is actually called stagflation. And you know, stagflation was not used in the economic theory before 1970s, 1965 in fact. This situation was first faced by United Kingdom, and we have a person called MacLeod. Stagflation, this word was first used by a Britisher called MacLeod in 1965, and from 1970s to describe one of the global economic crisis, the word stagflation became very popular. You know, slow GDP growth, high unemployment and high inflation, this is called stagflation. Okay, remember this, because all are related to inflation. In the examination, when you try to understand inflation, you should know the associated aspects. Now the next important aspect is deflation. Okay, now deflation is just opposite to inflation. A general decline in prices. A general decline in prices is called deflation. So anyway, we have written here, right? What is the deflation? A general decline in price is called deflation. So these are the three important aspects you need to know. Now let us try to understand what are the major types of inflation. Then of course we will come to the monetary policy, how it is controlled, all that. As we said, for every topic, if you understand basics, it will be easy for you. And preliminary 2 to 3 questions are on the basics in your preliminary examination. Okay. There are two types of inflation which are concerning Indian economy. This is basic to the question of why inflation continues to be a serious problem for India. Okay? It keeps coming. Recurring. It keeps recurring for Indian economy. So why is it so? To understand that, we need to remember, we need to understand what are the types of inflation. Now demand side inflation is actually temporary, right? Now why do you have demand side inflation? Simply sudden spurt due to sudden increase in demand. Okay, let me tell you, if there are rains, or if there is some traffic issues, or bandh for example, there could be a bandh or strike. We may have temporary problem for transport of goods, say vegetables. You know, in a particular day, if it is raining, or on a festival day, bananas or coconuts you want to buy, or Ramjan time, this is Ramjan time, right? Where we need to have some kind of feast or whatever, fruits. Why the demand is high? Because why the price is high? Because of the sudden increase in demand. But this is temporary. By nature, demand side inflation is temporary. So they can ask you which of the following statements are true with the demand side inflation with reference to, okay, due to sudden increase in demand the price will go up. If the price is going up, there will be inflation. Okay, now this is generally temporary because always this kind of demand will not be sustained. Okay, then how do you control? This can be controlled even at a larger level. For example, if there is greater demand for homes, the real estate prices might go up. Okay, whatever, then after that it will come down. It automatically gets corrected. So it is temporary. Now demand side inflation can be controlled by RBI's monetary policy. We are coming to this point. Monetary policy. RBI's MP means monetary policy. Okay, in examination don't use the abbreviations. Other than RBI is fine, you can use, but for your understanding, I am writing as MP only, monetary policy. Okay, we will come back to this. Now supply side inflation is actually due to larger issues of supply and it is long term, more dangerous, can be controlled by fiscal measures. Fiscal policy measures. Now you tell me what is fiscal policy measures and what is monetary policy measures. Very good. If government is investing, government measures whatever it is taking. Now yesterday we were talking about agricultural infrastructure fund. That is a fiscal measure. Okay. Or if they are constructing godowns, storage godowns, that is a fiscal measure. If they are setting up rural roads for agriculture marketing, that is a fiscal measure. Investment driven measures are fiscal measure. Will RBI invest in the economy? Yes or no? Will RBI invest in developing infrastructure? Strongly, yes or no? No, there is no doubt about it. RBI is a bank, it won't invest. RBI fiscal policy always associated with the government. Monetary policy is regulation of money supply in the economy. So RBI's job is to regulate money supply, government job is to take fiscal measures. And generally this will be in the serious items such as food grains. Remember, make a note. Whereas demand side inflation is temporary. That could also be in vegetable prices or whatever, but they can be brought down. Whereas supply side is bigger things. For example, if you see price of 1 kg of rice, if it is becoming 60 or 70 rupees, then it is definitely supply side inflation. In India, supply side inflation predominantly deals with the food inflation. It is also called food inflation in the case of India. Now the point I am trying to tell you here is, see, if RBI's monetary policy, we will just come back to this in a more detailed manner after 5-10 minutes. But for time being, remember, RBI's monetary policy is regulation of money supply. Just for 5 minutes sake, you remember like this. Regulation of money supply can alter the price and demand. Can alter the demand. Regulation of money supply can alter the demand. How it regulates, I will explain after some time. For example, if there is greater demand for homes, if there is a real estate bubble, RBI can change the monetary policy to bring down the demand. How it is done? We have two major instruments of monetary policy, which is called repo rate and reverse repo rate. Okay, repo rate and reverse repo. There are more which I will tell you after some time. Now repo rate, remember, is the interest RBI charges from the banks for the loans it gives to them. RBI gives lot of loans to bank to meet day-to-day requirements or medium-term and long-term requirements. And there is no free money in the world. There is an interest. Now how banks work? Very simple. Remember, there is a process called credit creation. You deposit 100 rupees. I deposit 100 rupees. He deposits 100 rupees. She deposits 100 rupees. We have 500 rupees in bank. Now bank will keep a certain portion of this 100 rupees of each of us and give it to somebody else. Creates credit. It creates credit facility with our deposits. It operates on the single principle of everybody not withdrawing at the same time. Now you put 100 rupees, I put 100 rupees. There is no rule that you want it today, I want it today, he wants it today, she wants it today. There are lakhs of customers. Nobody withdraws on the same time. If somebody withdraws on the same time, it is a run on banks. Banks will collapse. They can't manage. So this is called credit creation. So deposits they take, give the loans. The interest bank pays on the deposits, right? Say for example 5%. You put say 1 lakh fixed deposit in bank. You are getting 5% interest. Then that 5%, banks will have to manage staff, banks will have to manage employees. That is added to this. 5% interest on deposits. Then whatever costs banks are incurring, this is called cost of funds. Remember carefully, all these are important. Cost of funds. Cost of funds for the bank is the interest it pays on the deposits and the other expenses it incurs on maintaining branches, employee salaries and all that. Then banks charge interest on the loans given, right? Deposit, if you deposit, you will get interest. If you take a loan, you will pay the interest. So the net difference is called net interest margin. The net difference is called net interest margin. Now why I am telling, banks are doing business at the end of the day. Commercial banking, that's why it is called commercial banks. They are doing business. Now how do you think RBI will regulate demand at the economy greater level? If there is price rise because of demand side inflation, they will, home loans, let me tell you the example of home loans, it is more understandable. There is a lot of demand for home loans and price has gone up very high. It is called bubble. It may burst anytime. It may not sustain. So RBI will simply see, they will increase the repo rate. You know, what is repo rate? Interest charged by RBI on the loans given to banks. Bank take loans from RBI and give it to you and to me. If they are paying say 5% interest, they charge 7% interest from us. The remaining is profit. Now when RBI increases repo rate, banks cost will increase. Now banks are business, I said. If the cost is increased, banks will pass it on to the customers. So if the home loan rate interest, I have a home loan, really I have a home loan. I have a home loan. Now today RBI 10:30 they will announce, you know, in fact every RBI policy we can go to RBI and we have to take permission and approval. There we can ask questions. Every RBI monetary policy I go to RBI office, RBI governor will have a telecast, then we can ask questions. That is how we understand. Of course I also have to teach, right? So I need a greater understanding than you. And I love this subject. So anyway, I have a home loan. Today RBI is going to increase interest repo rate by 0.5%, 50 basis points. Assuming that my home loan interest is 7%. next 1 or 2 days, next week, SBI, which is the bank I have an account, will increase my interest rate by 5%. Home loans will become costly. Loans will become costly. See, you are still young, you may not know the implication, but you take a 30 lakhs loan, if there is a 5% increase in your EMI will go up. So, if I have a 40 lakh loan, if RBI increases repo rate, the EMI will jump significantly. Okay? So, overall, people will start thinking whether they should take loans or not. If banks have been charging higher interest rate, the number of loans are reduced. If the number of loans are reduced, what will happen? Demand will come down. You know, when interest rate is cheaper, you take loan and buy a home. If interest rate is 10%, some people may not take the loans and buy homes. Demand will come down. This is also at a larger scale, friends. Corporates also take loans. Big corporates also take loans. So by repo rate, the crux of our discussion, demand side inflation can be controlled by monetary policy instruments such as repo rate. Okay? So it is not dangerous. But now supply side inflation. Now supply side, largest issues of supply. If there is a problem in food grains, either see there is a crop failure, or in India we have a lot of problems. Marketing is an issue. Farmers may produce, but the goods will not come to the market. We don't have storage facilities. So because of that, if there is an increase in food price, whether they are rice ganivandi, pappulu ganivandi, whatever, cereals ganivandi, if they suddenly increase, it is more dangerous in a country like India, because there are the poor people in India which are actually who are actually suffering because of this price inflation. So it can be controlled only by fiscal measures. If we invest more and more in agricultural infrastructure, you develop more irrigation projects where production will be more, or you develop more roads where the goods can be brought to the markets. So this is actually done only by fiscal measures. Fiscal measures who will have to take? Government will have to take. Budget they announce. But in India the problem is supply side inflation. RBI is desperately trying to control with monetary policy. You know, that's why we have a problem of inflation which is continuing forever. We need more important fiscal measures. Of course, government is taking in the recent past. So to control India's inflation, we need more fiscal measures, not monetary policy measures. Okay? There are some discussions on what is the purpose of RBI. You may ask, if that is the case, why RBI is doing? It can as well keep quiet. You see, almost 4 RBI chairmen, governors. We have Y.V. Reddy, then we have Raghuram Rajan, okay, we have Shashikant Das, Subbarao, Y.V. Reddy, then after that we Subbarao, Dr. Subbarao, then we also have third Raghuram Rajan, then now Shaktikant Das. Okay, all the people made it very clear so many times when people ask questions, why are you doing, why are you unable to control inflation? They say, we are trying our best with whatever means we are having, because India is a country with poor people. The objective of RBI in India is also to help the poor and control inflation. So whatever methods available to us by the Constitution, by the RBI Act, we are trying to do it. Whereas if it is US Federal Reserve, they say we are not bothered about inflation. We are not bothered about people. Their constitution is different. So this is what you need to remember, some basic points about inflation. Is it clear so far? Now, can you tell me why there will be lower GDP growth if there is higher inflation? why there will be lower GDP growth if RBI is increasing repo rate to control inflation? Why? Due to? Yeah, corporate investment. See, investments is not only our investment. GDP requires, growth requires manufacturing and industry investing thousands of crores. 2 days back I was telling you in the class that some 2500 crore cement factory was set up in Andhra, right? Now they are investing 2500 crore. Definitely 500 crore from the bank loans only. So if there is a higher interest rate, investors will not invest. Retail is fine. Even retail demand is coming down. As I said, if you are all not buying homes, the GDP will come down because the construction will be stopped. But larger level, RBI's monetary policy of higher repo rate is dangerous. As you said, you people said, it is dangerous to investments. That's why we always have a demand that there should be low repo rates. Every monetary policy. Today you see after some time, then there will be lot of reactions from Confederation of Indian Industry and the CNIBN or FICCI or whatever. Everybody will say RBI should encourage GDP growth. One of the reasons for lower GDP growth in 2019-20, 3.8% range we are talking before COVID, was high repo rates, higher monetary policy. It is called tighter monetary policy. Okay, tight monetary policy means there should be higher, interest rates. Now I want you to understand one word. What do you mean by monetary policy transmission? This was asked once in prelims in UPSC. What is called by monetary policy transmission? Instruments? There are 7 instruments. I will talk about that. Generally, inflation control is mainly done by repo. There are other facilities RBI gives like CRR, LAF. We will come to that. We will just talk about it in a while. We are first trying to understand the basics for you. Then we will jump into monetary policy. MPC committee which was set up in 2016. What are the targets and all that. We go into a mains mode. These concepts are important to help you in the preliminary to answer questions and also to understand the future discussion we are having. Now you tell me, what is monetary policy transmission? Not exactly. See, that is, we will come back to that. That is by CPI and WPI. How inflation is measured is consumer price index, wholesale price index. There are 2 price indexes which have baskets. Even see, it is the A4 sheet papers we buy, that price is also monitored to see whether the inflation is up or not. So inflation, anyway, you asked, is measured by consumer price index, whatever consumer things we buy, and wholesale price index. But that is nothing to do with the meaning of monetary policy transmission. Please write down somewhere, 2 sentences. The translation of RBI's monetary policy decisions into translation of monetary policy decisions into actual actions of reduction or increase of interest rates on loans by banks is called monetary policy transmission. Monetary policy transmission. Let me give you one small example. RBI is increasing interest rates. Let us say decreasing interest rates by 5%. That is repo rate. These are called key policy rates. Key policy rates are repo and reverse repo. There are other policy rates, but key policy rates means repo and reverse repo. CRR and all this. So, if RBI is reducing repo rate or key policy rates by 5%, RBI expects bank to also reduce interest rates on the consumer loans by 5%. So, this is called monetary policy transmission. If RBI is reducing, banks are not reducing, it is said monetary policy transmission is ineffective. RBI cannot control banks to reduce interest rates. Remember, RBI can never decide interest rates of banks. You know, earlier the credit card 2011-12, even up to mostly 11-12, there is a credit card bust in India. Lot of people took credit cards. Every banks, all the banks, before 2007-8 global financial crisis, India was relatively better from the financial crisis. We have ABN AMRO, we have Citibank, we have other foreign banks, Federal Bank, and also private banks, ICICI, HDFC, UTI Bank, then of course it has become Axis Bank. All started giving lot of credit cards. It gave so many credit cards, people took and spent. They were not able to pay. This is a credit card bust. And the reason that is given is, I will tell you as an advice, never use a credit card in life. You keep one. Why do you want to keep? If at all you are traveling abroad, or you are traveling in India, you just want to buy something online nowadays. Some people, some online only accept credit cards. Or if you go abroad, they will ask a credit card. Because I have traveled 12 countries. Whenever we go abroad, if you are staying in a hotel, they will ask for the credit card. Why? They will have the demand, lien antar danni. Credit card మీద lien అంటారు. ఓ 30,000కి వాళ్ళు ఆల్రెడీ తీసేసుకుని క్రెడిట్ కార్డులో money will not be deducted, but they are authorized to deduct. మనం బిల్లు పెట్టకుండా హోటల్లో చెక్ చేసాం అనుకోండి, వాడు అందులో తీసుకుంటాం. వాడికి ఏంటి గ్యారంటీ? పైగా ఫారిన్ హోటల్స్లో యూ హ్యావ్ టు బి వెరీ కేర్ఫుల్. దేర్ విల్ బి ఏ ఇన్సైడ్ బార్. ఓ ఫ్రిడ్జ్ పెట్టి, ఇప్పుడు 5 స్టార్ హోటల్స్ ఇండియాలో కూడా పెట్టారు, అన్ని రకాల బాటిల్స్ పెడతాడు వాడు, వైన్, వాట్ ఎవర్. అరే అన్నీ పెట్టాడు హోటల్లో, ఫ్రీ అని తాగేసాం అనుకోండి, పేలిపోతుంది. నెక్స్ట్ ఇంకోటి కూడా ఉంది, ఆర్ బిట్ అడల్ట్, సో ఐఎమ్ టెల్లింగ్ యూ, దేర్ ఆర్ టీవీస్లో ఏంటంటే దే హ్యావ్ అదర్ కంటెంట్. మనం ఒక్కరం కూర్చున్నాం కూడా కొట్టేసాం అనుకోండి, దానికి చాలా బిల్లు పడిపోతుంది. వాడు వెళ్ళినప్పుడు ఒకసారి వన్ వెరీ సాడ్ ఎక్స్పీరియన్స్ హ్యాపెండ్ ఫర్ వన్ గై, ఇండియన్, హీఈస్ ఫ్రమ్ బెంగళూరు. దిస్ ఈజ్ ఇన్ 2007. I went to Czech Republic. The capital is Prague. All cinema shootinglu, dances అన్నీ అక్కడే అవుతుంటాయి. ప్రాహా అంటారు. So you are in some hotel. He also Indian only. He is some official, I doubt. పెద్ద ఆయన కూడా. ఆ time he must be 60 or whatever. So in room there is TV. This fellow watched all sort of things by thinking TV ఉంది కదా. While checking out, I was checking out, he was checking out. Then that lady, counter lady, is a huge lady. She is almost this much, some European. ఆ తలుపు పట్టదు అంతుంది. సో ఆవిడ కౌంటర్లో కూర్చుంది. సో సార్ యువర్ బిల్ ఈస్ అనేదో చెప్పింది. నో ఇట్స్ ఆల్రెడీ ప్రీ బుక్డ్, ఐ నీడ్ నాట్ పే ఎనీథింగ్ అన్నాడు. సార్ యూ హ్యావ్ వాచ్ టీవీ అని. ఇండియన్స్ ఏంటంటే గమ్మున అబద్ధం ఆడేస్తారు అన్ఫార్చునేట్లీ, అందరూ కాదు, సమ్ పీపుల్. అంటే వెన్ సమ్ మనీ ఈజ్ ఎంప్లాయిడ్ సింప్లీ దే లై. ఫారిన్ కదా, వాళ్ళు పట్టేస్తారు, వాళ్ళకి తెలియదు మనకు అన్నీ ఉన్నాయి. ఇప్పుడు అన్ని చోట్ల కెమెరాలు ఉన్నాయి, మనం ఏం చేసామో అందరికీ తెలుస్తుంది. ఇదివరకు అలా తెలిసేది కాదు, 2007. ఈయనకి అవన్నీ తెలియదు. సింప్లీ ఆయన నో ఐ డెంట్ వాచ్ అన్నాడు. ఆవిడ ఇంత లిస్ట్ తెచ్చి, డూ యూ వాంట్ మీ టెల్ వాట్ కైండ్ ఆఫ్ థింగ్స్ యూ హ్యావ్ వాచ్డ్ సార్? ఇట్స్ సేమ్ కదా. సి అట్ దట్ ఏజ్, సి ఎంగేజ్లో వాట్ ఎవర్ యూ డూ ఇట్ ఈస్ ఫైన్. బట్ 60 ఏళ్ళ ఆయన రూమ్లో కూర్చుని నానా చెత్త చూసి డబ్బులు కట్టినని చూడలేదంటే పరువు పోయింది అందరి దగ్గర. సో ఫారిన్లో చాలా జాగ్రత్తగా ఉండాలి బై ద వే. సో ఇఫ్ యూ గో అబ్రాడ్, క్రెడిట్ కార్డ్స్ యూ షుడ్ హ్యావ్ వన్. బట్ వై ఐఎమ్ టెల్లింగ్ దిస్ ఎనీవే ఈజ్ 36% to 42% is the interest rates on credit cards that they don't tell. Now the very simple logic is, they say this is a revolving credit. 14 days if you can pay, there is no interest. But that financial discipline many people will not have it. Okay, so 36% was interest rate anyway. This is called credit card bust. Then there are a lot of news items also. RBI was blamed. RBI was asked, why are you allowing the banks to charge such a huge interest rate? Then RBI made it a point that as per RBI Act, 1934, as per RBI Act, RBI does not have the power to regulate interest rates. It can only suggest. It says, why are you charging more interest rates? So as a business principle, RBI is not trying to, cannot regulate. And RBI Act also, you have to remember, it is 1934 RBI Act, so interest rates anyway RBI cannot regulate, but they can ask, they can do it indirectly. So monetary transmission, we are actually talking about monetary transmission. RBI expects bank to pass on the interest benefit to consumers. If it is reducing 5%, 2-3 days, all banks will reduce. You just, tomorrow I will also explain RBI's policy briefly. We have a policy today. But day after tomorrow, next 2-3 days, you read newspaper, definitely they say RBI, SBI reduced interest rates or SBI increased interest rate, like that. This monetary transmission, you remember. Monetary transmission is an important concept for GDP. To make RBI effective, to make RBI functioning effective, monetary policy transmission has to be there. Okay. So these are the simple basic concepts that you need to understand. Inflation, stagflation, deflation. Then what are the types of inflation? It is M1 and M1 plus M2. Okay. Then you also have to understand what is demand side, what is supply side, how it can be controlled. Now let us try to understand. From 2008-9 is the global financial crisis. From 2010-11, initially everything looked better for India, but later we started feeling the pinch. There was greater inflation. 2010 to 2016 is a very tough period for inflation in India. So there was lot of discussions in the government and policy makers. How do we focus on reducing inflation? Can we make some legal binding on RBI? Can we give some direction? See, as you people rightly said, if policy rates are increased, investments will come down. If investments will come down, what will happen? GDP will come down. So GDP comes down, the problem is for government. 2014 elections, you might still be kids at that point of time, 10 years ago, 2014 elections, the serious issue between UPA government and BJP government is the economy development. The BJP government, NDA government came to power by arguing that UPI is unable to get GDP growth. You know what Chidambaram, the finance minister was then, what Chidambaram was saying is, RBI is not helping us. RBI is not helping us. RBI should reduce interest rates so that investments will come. RBI, these people are tough people. Y.V. Reddy and Subbarao, these are great civil servants, the least bothered. They are not bothered at all for the other postings or whatever. Yesterday I said, I met World Bank Executive Director, Parameshwaran Iyer. He is also like that, very lean man. He is saying, I am not bothered. He is a UP civil servant, very inspiring. That's why we keep meeting good people. We learn things, and we also, it's very inspiring. He is very simple man. He is very lean fellow. Assala ehi tension leda, prashantanga unnadu. So what he was saying is, see, the civil services gunchi maatladtanu, because ASCII is a training institute, Administrative Staff College of India. Lot of civil servants keep training. Yesterday 60 people are there in the training. He was addressing them, I went. So they were saying, as long as you are not bothered for posting after retirement, you are peaceful. And World Bank asked him, they checked on their own, they made their own research and identified this man to be the executive director. So these people are very tough people. Y.V. Reddy, Subbarao, Dr. Subbarao, they never listened. They said RBI policy in India is to protect the poor. This level of high inflation we can't reduce. It is in this background that NDA government is very intelligent. Modi is super intelligent man, this team. They don't say anything, but they do all the things. Now how do you make RBI responsible to avoid this problem? 2016 they amended RBI Act and said there will be a monetary policy committee. 2016 they amended RBI Act, the government amended RBI Act, and they said objective of growth is also important for RBI. It is not just price stability. Price stability is for the poor anyway. So the primary objective of RBI is to ensure price stability while keeping in mind the objectives of the growth. Now how do you do that? How do we make these things accountable? Can we have a policy framework? Now inflation is, say, sometimes it is 6%, sometimes it is 7%. Now who will decide what is good inflation? I will ask you one question. Do you think an economy should have inflation at all? Yes or no? Why? Why? We are saying inflation is risky to GDP, no? Yeah, if there is no price rise, what is the benefit for the people? Right? Will anybody, any business, you are right, but the reason is a little more in depth. If companies are not getting price rise, now cement bags you see, 2 days back the cement prices are increased. They are expecting greater demand in summer, okay, post election time. So if the price is not increasing, what is the use? For example, the fee what I am charging is the same as 2010. Is there any use for me? Or the salary you are getting, which is the same without any increase, is there any use? So everybody expects an increase for return. So as she said, for growth we need to have inflation. But what is the level of inflation? Can we fix a range? Before 2016, it was RBI which is solely deciding what is correct inflation. The government said no, let's have a broad-based approach. So in the 2016 Monetary Policy Committee, the idea is to have flexible inflation targeting. These are very key words. Of course, I will give a handout to you, but these are key words you have to remember. Monetary policy, please take down. Monetary Policy, MPC Committee, MPC Monetary Policy Committee came into existence in 2016, okay, by amending the RBI Act 1934, and this you remember. Very important for prelims. Section 45 ZB. You know, what is the key section in RBI Act that talks about Monetary Policy Committee is section 45 ZB. Okay. This is amended to provided for a flexible inflation targeting framework. You know, a flexible inflation targeting framework. A flexible inflation targeting framework is the objective of Monetary Policy Committee. Okay. And now what is the fundamental aspect here? What is the target then? The upper limit of inflation now is 6%. Okay. Upper limit of inflation is 6%. It is called upper tolerance limit. Okay, and the lower limit is 4%. So inflation can range between 4 to 6% in practice. This is the fundamental aspect of the Monetary Policy Committee. Okay, so lower tolerance limit is 2%. 4 is ideal. You know, the next important point is 4 to 6 range. 2, yeah. No. 4, 6, upper tolerance 6, lower tolerance 4. It cannot come down to 2. Okay, the range has to be between 4 to 6. You know, and RBI has to maintain that. The next important point is, who are the members of the MPC? That is a very, very important. These are the questions which are picked up. You know, chairperson is RBI governor. He is ex officio chairperson. Okay. Then deputy governor, the second member will be the deputy governor. See, yeah. Chairman of the Monetary Policy Committee is RBI governor. Ex officio means he continues to be RBI governor, but ex officio is an additional responsible. Yeah. Then deputy governor. Who should be the deputy governor? Among RBI deputy governors, there is one separate deputy governor who is in charge of monetary policy. Department of Monetary Policy is there. It is headed by deputy governor. So he is the second member. Third member is one officer of Reserve Bank of India. A top level is grade 2. Grade 2 officer of grade 2 you need not remember. One officer of Reserve Bank of India. He will be a member. Then we have 3 more members. Okay, who are supposed to be experts. So how many members are there now? Total 6. Yeah, 3, very good. 3 from RBI, 3 from experts. And the term of these members will actually be 4 years. Of course, RBI governor will change. See, if his term ends, whoever the next RBI governor, he will be the ex officio chairman. But the remaining 3 members' term is 4 years. Okay, or if any other changes from time to time. As of now, it is 4 years. as per the MPC Act, MPC, not MPC Act, RBI Act 1934, amendment to the section 45 ZB, the tenure of the 3 members, non-RBI members tenure is 4 years. Okay. See, that we cannot say in the sense that if the RBI governor changes, whoever is the RBI governor, he will be the chairman, right? It simply depends on, one second, please be seated. It simply depends on his term. See, now you are an officer, you join as RBI deputy governor, Varsha. Hopefully you might become, if you get civils or whatever, all of you. That's why I always say you should definitely become these things, all these people are like you only, whether YV Reddy and all that, everybody, all have a small beginning. Anyway, so whatever, if you are retiring in between, whoever be the RBI governor, he will be the ex officio chairman, right? So 3 official members of RBI will be as per their retirement tenure or whatever. Remaining 3 non-official members will be appointed for 4 years. Now the MPC policy is, very important. The first meeting of MPC, remember this for prelims, was held in October 2016. This is a very, very important meeting because it was the first meeting that was held. The second important aspect is the MPC is required to meet at least 4 times a year. See, 4 quarters we have, 4 financial quarters. So 4 quarters a year they are supposed to meet, and of course today we have a meeting. As I said, today is the meeting. Okay. The next important aspect is each MPC member has 1 vote. Now there are 6, right? Including 3 official, 3 non-official members, and the governor has a 2nd vote. Definitely these are going to be important for the prelims. Okay, mains you don't have this kind of writing, but sometimes the questions on Niti Aayog or MPC are like this. They are simply asking what is functionality and modalities of Niti Aayog, what is MPC. So each member has 1 vote. Now 6, assuming a 3 voted, the governor will have a deciding power. He will have a casting vote. Okay. No, RBI governor. Each member has 1 vote. RBI governor has 2 votes in the event of a tie. Yeah. He has 2nd vote. So like that. See how it should be decided. If 3 voted for and against, RBI governor will get the primacy. And this has never happened so far. Okay, that is also a point. This has never happened in so far. So then the most important aspect is every 6 months RBI is required to publish a document. See, this is how even I get information about the economy notes and all that. These are the material for us, for the most updated economy notes we have to have. So every 6 months RBI publishes a document which is called MPC document, and it will explain the sources of inflation. It will also explain the forecast for next 6 to 18 months. This is called guidance. RBI guidance means the forecast, how the inflation is going to happen and all that for the next 6 to 18 months. Okay. Now the next thing is, we have some points of course which are called the instruments of Monetary Policy Committee instruments, MPC instruments. They are called MPC instruments. Okay, the most important is repo. I said it is the interest rate charged by RBI on the loans extended to banks. It is called overnight liquidity charges. actually financial world is very interesting. We don't know so much is happening in the banks. Now banks will tomorrow, SBI will have to disperse say 25,000 crore loans. It may not have money with it. It will ask RBI, please give me. Overnight, they produce, they lend 20,000 crore to SBI and they charge interest. And it has to be paid back immediately. Okay, so repo, reverse repo. We also have cash reserve ratio, CRR. Now cash reserve ratio is the average balance a bank will have to keep with RBI as a safety. It is called NDLT. Please note it down. NDLT is net demand and time liabilities. Very important for the prelims. What is NDLT? How CRR is decided? Net demand and time liabilities of the bank. Now net demand and time means you take a fixed deposit 5 years back, tomorrow it is expiring. Tomorrow you will get the money from the bank. Net demand, that means you will demand from the bank today that I have to get my fixed deposit money back. It is a net demand and time liability for the bank. Net demand and time liability for the bank. Okay. Anyway, there are just few more. For example, we have liquid adjustment facility, which consists of overnight as well as term repo auctions. It is called repo auctions. It is a short term loans, much shorter than the repo rates. Liquid adjustment facility. Today I have a problem. I have money, but today I don't have money. Even for us it happens. Na? Sometimes we may have money, but particular time lo na దగ్గర cash లేదు. I have to make some payment. Then it can ask RBI that I don't have cash now. Kindly provide some liquid adjustment. Liquid ante water kaadu, cash. Okay. Please remember, liquid adjustment ante cash. Okay. Then there is bank rate. Bank rate is, how RBI buys discount bills from the banks. For example, a bank has to get some, bank will say, I have a 1 lakh crore or 20 or say 50,000, 50 lakhs or whatever. These are discounted at RBI. That means they upfront pay more, but then they get the less money. This is called discounted upfront, that is bank rate. Then we have statutory liquidity ratio. All banks are supposed to have some minimum liquidity, cash, because we don't know when people demand. Okay. So anyway, there is also something called a market stabilization scheme, and which was introduced in 2004, and open market operations. This is also related to forex or normal bonds, government bonds and all that. If inflation is more, the government may say that we will sell bonds. So people will buy bonds. When we are buying, money from our system is going to banks. See, inflation is like a monetary policy. Inflation control is like a submarine, friends. If submarine wants to sink, it will take water. The doors will be opened, water will go inside. Then for that weight it will sink. If submarine has to come up, the tanks will be opened, water will go up. So weight will be less, submarine will float. This is the basic hydraulic principle of submarine. RBI, MPC, monetary policy for inflation control operates on the same principle. If it wants to take cash from the system, it will sell bonds. It want to release, it will buy bonds or sell bonds. If it is selling, you are buying. You are buying means what will happen? You give cash to RBI. From system it is going inside. So like that. So anyway, I will give a handout on this. Economy 2 handouts I already given, right? And history is pending. Entire history you take tomorrow. I am here 100%. First unit up to Gupta's I give. We will take a break. Then we will have the history class. Reverse repo is the interest rate RBI charged by the banks. RBI takes, if it takes money, RBI also pays the interest. RBI doesn't need money, but to get the system some money back, it also takes, why don't you give me money? But when the money is there, bank money is with RBI, they have to pay some interest. Repo is the interest charged by RBI on the loans to banks. Reverse repo is opposite. Okay, we'll just meet after 10-15 minutes. Sorry, 10 o'clock, not 10-15 minutes. You have to have breakfast.